What in the hell? What in the fuck am I looking at? This is Tesla. Alright guys, welcome back. Let's just talk about Tesla and then I'm gonna do some charts. I think we're definitely gonna have some big moves coming very soon. First of all, not financial advice. Consult your licensed financial advisor. I'm not a licensed financial advisor. These are just my opinions. This is more about learning how to trade, listening to me rant, and give my opinions on economy and markets and all of that. It could be wrong. Do not invest anything you're not willing to lose or lose sleep over. Have stops in place, emotions out. And what? All right, so post on my Twitter news room. Apparently, Tesla. Now listen. Tesla is greater than Ford, GM, BMW, Daimler Chrysler, and Volkswagen combined market cap wise. That's insane. I think it's gone up like $600 in 9 days, something like that. So you only get this. You could only get this with central banks printing trillions, handing out stimulus checks, and millennials not knowing what the hell they're doing, basically trading on emotion, taking their extra $600 a month or paycheck, stimulus, welfare, and gambling with it on the stock market. That's what's pretty much happening here. And they're just FOMOing and running up the prices. This looks like a crypto shitcoin right here. It's not just Tesla. I'm gonna show you guys some more crazy charts. Anyways, listen, I don't trust Tesla's balance sheets, earnings, reports. They're just moving cars. In my opinion, I could be wrong. They're just moving cars around in lots. As of late, I haven't even seen too many on the road. I saw way more like last summer. And, I just, as a car guy, come on. Yeah, I get it. They accelerate really quickly, right? The EVs. But come on. The panel gaps, their self-driving isn't self-driving. It's not. It's really not. You're supposed to have your hands on the wheels. It's like glorified cruise control. The range on them, not that great, and it diminishes over time. They're crashing into storefronts and everything. I mean, what's the big deal? What's so cool? What's so cool, guys? There's a freaking cheap tablet mounted to the dashboard. As a car guys, we all know, bitches love the switches. All right, that's all I gotta say. Now I get it. You know that the Cybertruck, it kind of grows on you because it's just this enormous wedge, and it's ugly, but at the same time it does look cool because it's so different. Like if you pull up in a parking lot with that thing, you're gonna turn some heads. I get it. It's stainless steel. Is it practical? No. It's for some douchebags. Like, can it tow? No. Maybe in the beginning it has towing power, but and torque. But if you understand layman's engineering, an electrical engine long term will not be able to tow things for long because they'll break it. because of the way the electric engine works, right? The parts it doesn't work like a combustion engine. The torque capability on it is not it's not for hauling, let's just say, or you know. But you know what? If I was Elon Musk right now, I would right now, today or tomorrow, whenever, before Monday, before the blow off top in the stock price, I would come out, have a press briefing or something, just walk out on stage, and he would probably just grab the mic, and the way he talks, well, haters gonna hate, and then just drop the mic and walk away. And that should put in the top here. But anyways, I mean, my indicators are saying we're on a sell right here. I mean, this is parabolic. Now, I was expecting a move higher just because we had an inverse head and shoulders, and I knew it was going to go higher with the rest of the market. And I'm not saying to short this because it's going to cost you a lot of money to short. I mean, the stock's at 1,500 a share. That's insane. So with your stimulus, you could buy one share. They're probably buying. I mean, I don't even know who could afford these call options. Like, why would you even risk it? There's some conspiracies out there as like an offshore thing in the Caymans that's just like market orders, calls. I don't know. I'm not gonna entertain that. But the moral of the story is, a lot of these new investors, anyone mid-30s and down who are in the markets now, age-wise, they love the story. All right, guys? They love the excitement of new technology and Elon Musk, Iron Man, whatever. And it's exciting. It's going to change the world, blah, blah, blah. Of course, you get... This is very reminiscent of the 1999 to 2000 dot-com bubble, all right? And it's going to end the same way. And nobody wants to look at mining stocks. They're so boring. Well, not really. I mean, if you've been holding them for the past couple of years, they're not boring because they just go up and make you money, and that's kind of exciting, I feel like. And then you could go out and buy toys, right? Like Tesla Roadster does look kind of cool, I won't lie. But I'm more of a petro head, right? I like the gas. By the way, like years ago, I did an experiment. There's way better alternatives. All right, not EV's not the future. Trust me. I made a lawnmower do more than double on a gallon of gas. Okay. I've done experiments. I bought a bunch of crap. I ordered a bunch of stuff, and I'm not an engineer or anything. I'm an okay mechanic, but if I could do that, then the tech is out there. They just don't want to roll it out yet. I mean, it is kind of rolled out here and there, but not as much. I don't really want to talk about it because I do want to get into it in a few years, and I don't want to give it away. So. Well, what else was I gonna say? But you know what? I'm not mad. I'm not missing out or anything. If anything, all of this money, well, for one, all of this new tech and the EVs, they all run on giant batteries, right? And it all needs more metals. And if you didn't know, gold and silver are the best conductors of electricity. And that's needed in the circuit boards, the batteries, everything else. And a lot of the minerals for the batteries, this and that, they come from the same mines that mine the metals, right? So, whatever. If they, this just brings more demand for the metals. So I am getting a little bit of a demand or a boost from my holdings from these certain companies going higher. But in the end, eventually, when reality hits and debts come due and the economy rolls over because inflation is starting to actually kill the economy, and the fact that, what is it, some crazy 40% small businesses are gone. All this is going to transfer to mining stocks and metals. Not all of it, but a lot of it. So whatever. I'm patient. If any, I don't like Warren, but Buffett said one of his greatest sayings, in my opinion, is money transfers from the impatient to the patient people. And it's going to do that. And it's going to transfer out of here into my stocks. Eventually. I'm hoping within the next 3 years. All right. So just watch the nonsense, laugh at it. There's opportunities to short them as well. And I take them sometimes. So, matter of fact, talking about shorts, I just put on a bunch more. Although I was, there's a problem when you're too early. I tend to be early, at least 2 weeks early, at least. Sometimes a month early. And that sucks when you're trying to time this stuff, especially if you leverage or use options. Because I had a lot of call options on inverse ETFs to short the markets expire today. And it sucks. It's painful. But I put on more. Now, here's a strategy. In case the markets, let's take a look at the FANG and the NASDAQ here, in indexes. So if the market has a huge correction, and I know my last video I said it should happen this week. We did have a sell-off yesterday, but the markets went higher today. Go figure. But be patient. It's coming. You'll see why. But I was too early, right? So, but the strategy is, if the market has a serious correction, like the velocity of the drop is very sudden because there's just air pockets beneath the price because it's ran up in a parabolic fashion, as you see here, then the mining stocks will sell off as well, and so will gold and silver, because of margin calls, because people have to sell everything all at once, because their other holdings are going into negative and they're leveraged up, right? So they have to sell everything else to meet their negative equity in their brokerage account. That's why you never take on margin accounts and leverage and use options if you literally don't have like 7 years experience making money doing it. All right, because it's great when everything's going your way, but when it's going opposite, you could blow up your account. You could literally end up owing money to the brokerage account. So I have to constantly remind people that. All right. So what I like to do, but I'm talking to, so these videos are for everyone, but I talk to more seasoned traders and investors as well. And I like to hedge my entire mining portfolio, my entire account, by shorting the broader market, like the NASDAQ or the FANG index, right? So, and how I like to do that is with inverse ETFs. I go long, because when you long something, there's always more potential to the upside than potential to the downside. The max potential to the downside is 100%. The max potential to the upside is infinite. Same goes if you naked short, or, when you short, your losses are technically infinite because something could go up infinitely, but it could only go down 100%. So shorting through inverse ETFs is a no-brainer to me, and that's what I like to do. So if the market drops and he has a huge drop again, I don't expect gold and silver to fall as much as the rest of the market. But it can drop a decent amount. Maybe the miners will drop 10, 15, 20%, and that would hurt my account, right? Because I have some leverage ETFs and I'm long on a lot of stuff. So how I hedge it is I'll buy call options on inverse ETFs, which are shorting the broader market. And then I'll take profits on those, and it'll make up for the drawdown in my account, and then some. I'll even make a profit. And then I could buy the dip on the mining stocks again. And that's what I've been doing. And this is how you hedge. You know how I read zero hedge all the time? Well, it's they're called zero hedge because it's funny, right? Because a lot of people have zero hedges on. And then when things go the wrong way, they go the wrong way, right? And then they blow up their account. So, here's the FANG index on the left, NASDAQ on the right. This is parabolic. And yes, this is not a logarithmic chart. I don't care. I don't want to use the logarithmic chart because I actually want to see how because it using the whatchamacallit chart, it helps you see the percentage within the moves and how sharp they really are, because it helps you see human emotion much better, and that's what charting is. And listen, the other indices don't look like this. But what have I told you? Because of Ray Dalio's index funding, the FANGs and the NASDAQ stocks are the largest weighted ones in the in the index funds, which are in boomers' retirements. And if everyone's buying tech stocks and like Amazon, Apple, and all them, it's the tide that raises all ships. And guess what the problem is? Well, when those stocks, the big ones, stop rallying and they correct, it really takes the market down with them. So what they've done here is, I mean, you're just looking at massive trillions and trillions of dollars of misallocated capital, like Tesla. And when the party stops or the music stops, or when maybe some little more reality hits, maybe the more lockdowns and, fear of that, or how about the rest of Q2 earnings? Q3 are going to be really bad as well. Or maybe the fear of election that Orange Man doesn't win. Any one of these or anything else, maybe that dam in China breaks. If you guys haven't looked at that, I posted this in the newsroom like a week ago or 2 weeks ago. Apparently, there's one of the biggest dams in the world, if not the biggest one, water dam. It's a hydroelectric dam, right? And it produces like all the power, or like 1/3 of it, or some large amount, to the most industrial parts of China. And there's also a bunch of nuclear power plants down the river, and major cities like Wuhan. So, and this dam, there were satellite photos of it, and it's literally like bending. It's not supposed to happen. There was like engineers. Anyways, long story short, what if that thing breaks? Because people are talking about like that thing's gonna break any moment now. And if that, that would really hurt global GDP, because, China is the world engine. Now, it has started back up somewhat. It's not full capacity like all the manufacturing and plants. Also, the trade war, that's just going to keep going. So, maybe all of this combined in the next few weeks is going to finally cause some sort of pullback and correction. That's what I'm betting on. And the technicals, the TA charts, are telling me we're really overextended and overdue for some sort of, anything, like a dip, a pullback, correction, something. All right? And it's perfectly timed with metals as well. Now, here's what's interesting with metals. We do on the daily have a 9 sell signal using my TDI indicator, which is very, very, very good. So you guys may get one more dip buying opportunity, but you might not. I don't know. If the market really sells off, velocity, like I said earlier, right? That would be one more dip buying opportunity, and then after that, I mean, this is it. And I think it'll be very short lived. It'll only probably last a week or two, and then after that, the metals are just gonna keep going higher and go for the all-time highs. Also, see, there's a 9 sell on silver here on the daily, so we can see a 1 to 4 candle pullback, which is 1 to 4 day pullback, or that's a pullback. Now, if it's not a pullback, it's a correction, because let's say the market really starts crashing or has a steep drop and people get margin calls, then you'll get a 9-day pullback, right? So let's look at gold for a second, and then I'll look at silver. This is a weekly chart of gold. As you can see, a giant bull. This is a huge base. Look how long this base is. I mean, it doesn't get any more bullish. Now, if there is a pullback, right? That's fine. Let's say it lasts a couple weeks, and then we get back up to 1800. What do you see here then? What do we get? We get a giant, if you could see it, you see the orange? See this right here? Shoulder, head, shoulder, right? Giant inverse head and shoulder. Good example of that was that Tesla chart. We had a giant inverse head and shoulder right here, as you can see. And it shot the price to the moon. Well, same thing's going to happen with gold, except it's not on a daily chart. It's on like a monthly and weekly. So, I mean, this head and shoulder is from, this is nuts. It's from July of 2011, and let's say to the end of July this year, 2020, right? So that would be 9-year giant head and shoulder, inverse head and shoulder, which could shoot the price. I don't know. It could really shoot it up though. Like, I don't know how high it's gonna go, guys, but if it's shot to 3,000 or something. Now imagine if gold goes to 3,000. Imagine what the mining stocks will do. Like 10x is your minimum gain. It's your minimum. Also, another bullish development here. Someone tweeted. A giant cup and handle on silver. Like giant. A 40-year cup and handle. Now, I wrote a bunch of stuff here. I'm just going to read it real quick. It's really not unrealistic. Silver goes to a... Hold on. It's really not unrealistic. Silver goes to 100 plus. It's been suppressed for many years. A lot of its supply comes from as a byproduct from copper mines and other resources. So if there is a global recession, demand for copper and many other metals fall. So silver supply shrinks drastically. Although the silver mines I look at are gold and silver mines mainly. Like, they mostly only mine for that. Like 90%. So if other metals demand drops, it doesn't matter. Because it's mainly gold and silver, and a lot of investors, most of the demand will come from the investment side, but there'll still be large demand from electronics and stuff like that. I mean, at the end of the day, I mean, computers are still going to be made, and servers and routers for your Bitcoins or whatever. And it, and for the health industry as well. They're really big into silver and renewables, right? Let's say the Green Deal does come. Well, all those solar panels use a ton of silver. So, all right. So if there is a global recession, demand for copper and many other metals fall. So silver supply shrinks drastically. Also, so what I'm saying is the silver supply from other producing mines shrinks. So the supply shrinks, but the demand's only going to go up. Also, above ground supply circulation ends up in landfills within old electronics. By the way, nobody recycles electronics for silver. There's like one company out there, but it's like very new and they're not profitable yet. They might be in the future though, and I know which one it is. Also, there is the gold to silver ratio, 1 to 80, about somewhere around there right now. That needs to narrow. And that can narrow back down to like 1 to 15. So imagine if gold goes to 5,000 and then that ratio narrows to like 1 to 15. That's easily above $100 silver. Like, it's like, I don't know how much to do the math. Put it in the comment section. But it could be like I can't do it off the top of my head. I'm not that smart. All right, demand for silver is unique. All new tech, renewables, and healthcare industries need it. Now imagine what silver mining stocks will do when silver has its supply crisis and its price shoots towards $100 or higher. Currently, gold and silver mines stocks are still priced as if they are in a bear market, like 1 ounce silver is $15. Also, it's a safe haven asset like gold, and all of the easily mined silver has been discovered. Demand for silver can only go up with limited supply at a reasonable cost to mine. So, it's going to cost more to mine. So the easily mined silver has already been mined. So the only silver that's left are in the good silver mining stocks, which I research, remember, and they're sitting on resources and reserves, and if they have good ore, right, good ore grades, this and that, these mining stocks, like, their valuations are going to go up multiples just for the reserves they have in the ground. All right. Demand for silver. Okay, so 40-year cup and handle and my blue line crossover with the 200 MA. So we have a giant 40-year cup and handle, right? A 40-year cup and handle. 40 years. Let's go back to silver. Let me show you something. By the way, if silver starts breaking out above $20 and just starts running, I'm not saying it's going to happen next week or the week after. Like I said, there's probably going to be a small pullback or a dip or something. And then probably it'll happen like this summer. But if you take silver to a weekly chart, okay? Let me zoom out here. Give me a second. All right, it's easier to see. So remember back in 2018 when I was showing you guys when the 200-week moving average crosses above my blue equilibrium line, it will start a new bull market, or put in the bottom and then start the bull market. Well, guess what? It's happening with silver right now. Right now. Okay? So, and we have a 40-year giant cup and handle, whatever. And the paper manipulation, it's going to come to an end soon. Because what's happening right now, so JP, right, the bank, I don't want to say the full name, they have the largest physical silver hoard, and that's so they have some backing to the, I don't know, billions of naked shorts they put on to suppress the price possibly so they could make money, and so, I don't know, Apple and all these tech companies could keep producing cheap electronics, and use up the resources on the cheap. That's my theory. I can't prove it, but yeah. What's going to happen is what happened to WTI crude and USO futures, right? Futures. You know how it went negative? Because there was a giant, the bulls got squeezed, so the price went negative because demand basically went away because of the lockdowns. Well, we're going to see a similar situation, but the opposite of what happened when oil went negative. Like someone pays you, so you take their oil away from them. Basically, that's going to happen with silver. It's only a matter of time. It's not if, but when. And I think soon. I think we can see it this year. And when that happens, it's just going to shoot the price straight up. I don't know how high it'll go. It might just go straight to $50, like in a week or two. So right now, the silver mining companies are priced at less than 19. Right now, silver an ounce is at $19. You still can't buy it right now. Physical price is still probably around $24 or something, $25. But the mining stocks are still priced like at $15. Okay? Now imagine what will happen to those mining stocks, those silver mining stocks, if we get a giant short squeeze and no one can make delivery on the LBMA COMEX, and no one could all the short contracts, they can't make delivery if people are asking for delivery. By the way, all the mining companies and the delivery companies, the ones that smolter the metals and turn them into coins and sell them, they usually hedge their positions on the futures market, and the way they do it is they short the metals. Well, a lot of them have decided that we're definitely in a bull market now because of everything that's going on in the macroeconomic sense in the central banks. So what they're doing is they're just taking off their shorts. Some of them are actually going long as well to leverage up. And globally, everyone is buying more and more silver. And as the price of gold goes up, silver is the poor man's gold, right? So they're going to just look at silver as an alternative buy because they could buy more units of it. And not just that, the past like decade or two, because the price has been suppressed so long, that I'm telling you, the supply of it is the above ground supply. It's pretty much non-existent. It's in strong hands who are not going to give it away. Most of the silver is in investment hands, hodlers or whatever, and there's a lot of jewelry out there, but not that much. And the rest of it ends up in electronics that ends up in landfills or whatever, right? So the same thing doesn't happen to gold. The gold gets recycled, like 90% of it or something. And it's becoming increasingly harder to find silver. Like there aren't that many new discoveries of silver. There's a few. I know of those stocks. That's for the private group, right? So that's pretty much all I wanted to talk about today. I don't want to make a long video. I actually have to go. And take advantage of my 20% discount now. It ends Sunday. Okay? And they might be perfect timing for a dip in metals. And I'm talking about a dip. Let's real quick look at gold. I mean, there's already support at like, hold on, give me a second. You take it to the daily. There, I believe there is support. So if we do get a sell-off or a pullback, something, there's a ton of support anywhere. Well, the first line of support, I would say, actually, is at about 1760. And that might just hold up because smart money is buying every dip. Okay. Another support is 1700. And I really don't think it's going to pull back any lower than that. I know I drew this, but ignore that. That's pretty much, it might wick down below 1700 for like a minute, but then it's going to go right back up. I could be wrong though. I don't think I will be though. So I'm thinking a run up in metals until election, and then depends who gets elected, then a sell off, and then later in 2021 it'll go back up. So if you could time this right, I mean, you could really double, quadruple, or whatever your entire account and portfolio if you swing trade, let's say, the ETFs, which that's what I do. That's how I grow my account even more than just holding on to the mining stocks. Although if you're not experienced, you have a day job, you don't have time for all this. I mean, good thing I'm a swing trader, so you could follow me and still do it. It's not that hard. But if you just hold, at least I could help you buy the dips, right? And to keep accumulating. But at some point, TA is not going to matter, and there won't be any more dips, right? So this, I'm actually hoping that the price does fall in the next 2 weeks down to like 1700 or at least 1760, right? And then it'll quickly shoot back up. That's what I'm thinking is going to happen here. Because guess what? If the market sells off, what do? They panic. And then they'll do more stimulus, do more repo, and do Powell and the Fed will do everything in their power to get the market back up. So will Trump. So, and eventually Wall Street's going to wisen up to this, that maybe I should just buy metals even when the market is falling, because people are starting to figure out every time the market has a pullback or a correction, they'll come out with more QE, which will shoot metals straight back up. And from what I see is these corrections are much, they're not as bad as time goes on. They're less steep, and they rebound even quicker. Like, look at this right here. Like, during March, if you bought when I was screaming at the top of my lungs, hey guys, this is the best buying opportunity ever, I was screaming right here, right? Look how fast it rebounded. Literally within like a week, or 2 weeks, it shot straight back up and made new highs. Well, if we get another pullback, it might only last 1 week and then shoot straight back up and make new highs. Gold. Same with the mining stocks, right? All right, guys. Go to my website. Links below for the 20% off. You have to use that link. You add it to your cart. Click on the apply code. Takes 20% off. Then I'll send you an email invite to the private group. It's $10 a month. The initial fee is for the report, because you're going to get a spreadsheet. It's like almost 300 pages long. There's also a basics 101 to trading academy at the end, and some reading material I advise. And then you could enter the private group where I share my trades so you guys learn, and then there's more updates and more research and all kinds of stuff, and then a good awesome community where there's a lot of guys who crack jokes and talk about all kinds of mining stocks that I'm only one person, but a lot of them find other opportunities that have worked out really, really well as well. So, yeah, leave anything in the comment section, smash some likes, share my videos, please. It really helps. And I'll see you guys later. There's a bunch of free chat groups. There's a bunch of links in the description. All right, guys. Later.